Hello, everyone, and welcome back to another edition of UJA Genesis's Now You Know speaker series. My name is Simona Newman from the UJA's Israel Engagement team, and we'll be moderating our conversation over the next hour. Before I turn it over to our guests and get right to it, I'd like to thank everyone at home for tuning in today. By engaging with today's hottest topics in Israel, you, from the comfort of your own home, are helping to transform the way that we in the diaspora support Israel as partners who are committed to a shared responsibility for a shared future. And today we'll be discussing one of the hottest topics, that's for sure, perhaps because we'll be talking about a market that is quite literally on fire, the Israeli real estate market. And to provide some context, Israel has experienced dramatic house price gains in the past decade. Despite different domestic political uncertainty issues, security threats, and the global financial crisis, Israel's house prices have risen by 118% from 2006. So does that remind you of anywhere else to all the viewers at home? I think it does for me. The main reason for the surge in house prices was largely attributed to a supply shortage and low construction volumes. Others, however, have attributed it to a lack of domestic investment options and new policies from the central bank. A recent study from Professor Eli Kreisberg at Bar-Ilan University revealed that real estate accounts for 19% of gross domestic product and no less than 40% of public wealth. This, however, has been a contentious issue, leading to widespread calls for reform, leading to several new policies, including government actions to address supply shortage, discounted land sales to developers in exchange for government-set property valuations prior to listing, and tax breaks for developers looking to build rental units. So let's see where we stand today as I introduce you to our guests. And to keep us organized, I'll go clockwise from my view and start with you, Jane. Hi, Jane. Thank you for joining us today.
Thank you.
And would you just, tell us a little bit about yourself, where you work, the industry that you're in, and maybe a little bit of personal information. Are you an Ola, and any previous experience working with foreign buyers?
Okay, my name is Jane Ullman. I'm an attorney specializing in real estate, inheritance law, and small business law. I'm a partner in a small boutique law firm in Jerusalem. I myself live in Modi'in. I'm an Israeli trained attorney, meaning that I studied law here in Bar-Ilan, and I moved here after my undergraduate degree from California. I'm originally from California. My specialization really is guiding either new olim or people who aren't as familiar with the Israeli legal system, or people who are out of the country altogether, through the process from A to Z, building you a team, being your person in your corner, and streamlining the process for you. So I'm an attorney for 20 years, so definitely have a lot of experience doing that. Frequent speaker with Nefesh B'Nefesh and other groups abroad, Canada and United States. And this is just really a niche that we've developed, trying to help people understand how to do things remotely, especially.
Amazing, thank you. And I move over now. Next on my screen is Yaniv. Hi, Yaniv. Would you also give us a little brief introduction to you?
Sure. So my name is Yaniv Gabay. I was actually born in Herzliya in Israel. I moved when I was 6 years old, not my choice, to Teaneck, New Jersey. I was raised in Teaneck. I came back at the age of 23 through a program called Garin Sabar. And I now live in Efrat with my wife and 4 girls. My office is on Halamed Hay Street in Old Katamon. I am a real estate broker. I own Gabay Real Estate. And we specialize in working with foreign buyers in both in Jerusalem and all over the country, really. We're working on, now projects in Herzliya, Ra'anana, Modi'in, etc. Wherever people want to buy, we broker the deals for them.
Amazing. And next, I turn it over to you, Moshe.
Hi, I'm Moshe Wolshinsky. I'm the founder of Mobile Mortgage and Finance, based in Jerusalem. Made Aliyah from Los Angeles. It's a second Californian. My career started there in 1985, and then early 90s, actually started working in the market here, in the mortgage market, representing my U.S. clients. Was also involved in a couple of consumer finance related legislative initiatives, both in the mortgage and consumer credit reporting. Also very involved speaking with Nefesh B'Nefesh webinars, et cetera, and really looking, a lot of my clients use me as a financial concierge. That's, and pretty much as we've evolved in the COVID situation, as Jane said, it's that working remotely has taken on a whole new meaning.
Yeah, tell me about it, right? Not commuting has been quite the experience, good or bad. I'm not sure yet. But Yair, I turn it over to you next. Hi, Yair.
Hi, thank you very much for having me. I think contrary to most of the people here, I was actually born and raised in Israel. I'm 9th generation Israeli. So as much as I want, I do not have any other passport. But I did marry an Ola Chadasha who made Aliyah from Australia, so I do have that connection. I am a real estate lawyer. We're a small boutique firm that was started by my father over 50 years ago. So we've pretty much seen and done everything we're relating to real estate in Israel. When I joined the firm over 10 years ago, I dealt mostly with people that are making Aliyah, or Anglos that made Aliyah, or foreigners buying in Israel. That was my niche in the market. Same as Jane, we've been speaking on behalf of Nefesh B'Nefesh, did many tours around North America, whether Canada, in Toronto, Ottawa, and Montreal, and different cities in the US, speaking about real estate. And same as all the world is moving now, we're doing many webinars and online speaking relating to the market in Israel, relating to doing deals from abroad here in Israel, even during this time.
And I have to say that it's, on one hand, we always talk about how the logistics have become so complicated going online, but on the other hand, the opportunities that we're able to all be in one room without flights, meetings, tickets booked, hotels, I think has provided so many amazing opportunities for the public to hear from experts on a variety of topics. Odiel,
even there's technologies that have been developed now. You can actually see apartments from your home in Canada.
Yes, I've done it myself.
And see what the view from the window is going to be.
It's unbelievable, the technology right now. Odiel, I turn it to you. I know everyone at home is staring at your office with tremendous envy right now. So tell us a little bit about you and the work that you do.
My name is Odiel Malchi. I'm originally from New York. I made Aliyah with my family in my teens. Up until the end of June, I was working at Bank Jerusalem as a mortgage specialist. My focus was foreign residents and mortgages for businesses as well. I worked for Bank Discount for 7 years prior to working to Bank Jerusalem. And currently I decided to go as an independent mortgage consultant, and I'm located in Jerusalem.
Amazing. So I don't want to wait any longer since we're already 15 minutes in, and let's start the conversation kind of chronologically with the order. I know that so many people in the audience are curious about how do I start? What is that process? So Yaniv, let's talk about let's just get into it. What are some of the different regions in Israel that you see foreigners looking to as a good investment?
Sure. So that question is, a difficult one to answer without saying it depends and just simply giving you locations. That depends on what you consider to be a good investment. A good investment could be focusing on the resale value. A good investment could be focusing on the return of investment. And they're usually two very different things in Israel. The return here, by and large, is not extremely high, meaning the monthly return, the income that you're getting from rent per year in relation to the purchase price of the property. So if we're looking at that, if we want the highest rate of return, we're usually going to go to on a long-term rental option. In other words, not an Airbnb or anything else, or not dividing, one apartment into 5 apartments illegally. If we're looking at a straight up long-term rental option, we're going to look at the periphery the most, the most northern points of the country and the most southern points of the country will give you a better return on investment on the rate of return. The resale value is going to be concentrated in the center of the country and in the major cities. In other words, and this is really not talking about future resale value because I'm not a prophet, but if you're looking at the longevity of properties and you're looking back 10 years, the greatest increase in prices have taken place in places obviously like Tel Aviv and Jerusalem and Herzliya and so on and so forth. If we're looking again at the long-term rental return, because we're dealing with locals that are not paying premium prices for rent, then the rental rates are pretty consistent throughout the country, but the price differences are huge. There is a way of kind of having your cake and eating it too, where you can do short-term rentals, but there are legal ramifications to that, and I'd rather not get into that.
Fair enough. And would you say that what foreigners end up considering as a good investment varies tremendously from what locals are looking for as a good investment? Is there a difference in thinking and rationale, or do you find that there's a set, style, apartments, houses, regions that are just consistently across the board considered popular with both locals and foreigners alike?
Right. It's hard to couple all locals and all foreigners, like lump them into one category. You have people that are very comfortable renting out a property in an extremely old building, provided they're getting the rent, the rent that they'd like, or there's a potential resale value, or there's a potential rezoning and reconstruction of that building, and they live in the U.S. and they're doing it all remotely, and they have people in place that they can trust. And then you have locals that literally will live, 2 buildings down from an apartment like that and would never touch anything that's not a new building.
Right.
What I see the difference is there is a comfort level for foreign buyers rather, to purchase properties in areas that they themselves would feel comfortable living in. And that also gives them the benefit of potentially being able to rent it out to other English speakers, making it a little easier to deal with renters. And also, if they do one day decide to come or use the apartment or whatever, they have that option as well. Whereas a lot of local buyers will, they'll live in Tel Aviv and they'll have an investment property in Beersheba.
So Moshe and I were talking, actually, funny enough, yesterday about things that North Americans aren't attuned to looking for, and that, foreigners need to really be careful when entering the Israeli market sometimes. And I was curious, from your perspective, do you feel that Israelis, again, to be very general, versus foreigners, are looking for different things in a home? And I think, what are Israelis looking for that North Americans should learn about to consider when they're looking to purchase as well, and to kind of use that local mentality a little bit more?
So without having gotten paid from either Attorney Givati or Attorney Ullman, I'll tell you that the first thing that they absolutely need to do is secure a good attorney. Just aside from the condition of the apartment, which it pales in comparison to so many other pitfalls that can take place with faulty registration and not real ownership, and paying, certainly purchasing pre-construction, what they call on paper here. It's very important to have a good attorney that understands their needs and is professional and honest, to make sure that all of that is okay. Not all of us agents are so upfront and honest, and it's important. As far as like condition of properties, I think it's more of like just a dissonance of expectation. The expectations of what you would get. I can't tell you how many times I hear, I'm paying $3 million or I'm paying $2 million for this. Like, what? They're not even giving me screens in the windows. There are certain things that are just not customary here. When you purchase pre-construction, you have to take into consideration, in a new building, you have to take into consideration that light fixtures, furniture, appliances, built-in closets, even in luxury buildings, is not standard here. So when you're looking at your costs, you have to take that into consideration.
Absolutely.
Can I just add one thing that I think that in my experience also, North Americans really have a culture of flipping. Buy something small and you move up and you could do something bigger. Israelis much more look forward to the future because it's expensive to buy and move, especially with the taxes, which we'll get into. So they often will stretch and buy the biggest thing that they can afford because they know that they might not they're not necessarily as likely to flip or something. Look, maybe I can close in this room or close it, what can they do in the future to make it grow with their family? Whereas when I was a new Ola, I didn't know to look for that at all. And we were forced to move maybe more quickly than Israeli family.
And Yair, you had something to add.
Yeah, I just want to something underlying the whole process, as Yaniv and Jane just said, there are major differences between how you buy and purchase property here in Israel to what you used to in North America. And then you need people like Yaniv and us lawyers to guide you through it. It's from the, even if the smallest thing, you're used to North America having a closing, the defining date, the most important date is the date of closing. When you make the last payment, you take the deed. In Israel, it's the opposite. It's the day you sign the contract. So you need to kind of lose the expectation and start from blank because, what you're used to of getting with the apartment or the legal structure or which order you go into things is totally different. And you need someone, especially buying from abroad, to make sure you have someone holding your hand and guiding you step by step.
I agree with everyone completely. And for anybody who's watching who might be beginning this process, really take this to heart. I think if you join any online forums about what it is like to invest in Israeli real estate, everybody will say in retrospect that they had wished that they had more external advice and guidance guiding them through the process. So definitely seriously consider working with someone reputable. Absolutely. I wanted to also talk to you as well, Yaniv, about what you were saying before about the Anglo areas and the comfort of living in those Anglo areas. And do you feel like that is only true with people looking to invest with the idea of someday moving perhaps, and that's why they're looking in areas like Herzliya or Ra'anana? Or do you think that it's a completely different ballgame for investors and that investors are kind of willing to branch out outside of those Anglo areas? Or again, going back to what you said earlier, because of the rent, it's keeping them confined to more of these areas around Jerusalem and the Sharon and all of that?
Well, that's a very good question, and it's very complex, and there are a lot, and it really depends on who we're talking to. I think that for almost everybody purchasing in Israel from abroad, there is a huge emotional component to it, and they're purchasing it not because of the huge return on investment that they're getting from rent. The opposite, the return on investment here is not great. I think it's a very emotional decision. And I think that you're right, classically, people were really looking at areas, pockets where there were Anglo neighborhoods. Today, you can almost see little Anglo neighborhoods, popping up all over the country, from the north to all the way down south. And I think that a concept of I need minimum $750,000 US dollars to purchase a property here, that is a myth that's being shattered because you have more building now, more construction in the periphery, and more adventurous Anglos, North Americans, moving out to those areas. And I think that they're more comfortable doing that if they'll have, let's say, a friend or two going with them. And when they have the right people in place, like an excellent attorney, a broker, and an apartment manager that they can trust.
And do you think that what's drawing them to these periphery areas is exclusively the price? Or do you see that with that, there's a new, resurgence of local economies with new jobs? Are the schools there as good as they are in other municipalities? Do you think that those things are taken into consideration? Or do you think it's mostly about the value of the land in the property?
Yeah, I think that it starts with the value, right? Like somebody that has unlimited funds coming from abroad is going to look, depending on their level, level of religiosity at the major cities here, certainly Jerusalem, certainly Tel Aviv, and so on and so forth. And then when they said, well, okay, I need to buy a regular 3-bedroom apartment anywhere close to the Kotel or a feasible walk to the Kotel, and I need $1 million for that. I don't have that, and I can't get more than 50% financing on something like that. So maybe I'll start looking at other areas, and then they see the appeal of other areas and the infrastructure in place there, and the parks and new construction. And when new construction happens, there are, you know, new schools being built and commercial centers and so on and so forth. And I can get in a place like Haifa or Ashkelon, a new building, and I can spend, you know, 1.5, 1.6 million shekel, or even $1 million shekel if I go even further out, and there are some other people purchasing that I know in those areas, then hey, $200,000, $250,000, that doesn't sound bad at all. Not easy to find, but it's something that's out there now as an option for foreign buyers as well.
So I have 2 very quick last questions and 1 slightly longer one before we move on. The first quick rapid fire one is, how long is the typical close? Does it follow a North American 30, 60, 90-day model in Israel?
It very much depends on the timing it depends on the area. It's like a closing in a residential area that is predominantly people that are moving out for the school year, coming in for the school year. So you can have even a year closing, or an 8-month closing. Wow. You can also take possession early and have those current, you know, the people that own the property rent it out. There are all sorts of different combinations with which you have 2 very qualified people to talk about. And then you have in certain places, you can, again, 30, 60, or 90 days. That's all feasible until registration, especially foreign buyers that have to jump through all the hoops of transferring money and opening up an account in escrow, and they'll answer that a little more insight into that. Yeah.
I have to say that what you just told me before about the 8 months or even 1 year is kind of unheard of in North America. So I think that could be really very positive for a lot of people. And I guess my last logistical question is, for anybody who's looking to jump in right now, are you offering remote viewings, like virtual walkthroughs? How is that playing out right now with everything going on?
Absolutely. Basically, a client approaches me tells me what they're looking for, potentially to spend, etc. I give them different options in different areas. I send them, links with information about the properties. Then they tell me, okay, we like 1, 2, 3, 4. I go out, and it's so fun. I was in Netanya the other day. Took the day to also hang out on the beach a little bit. Don't tell my clients, but I do these walkthrough FaceTime videos of the properties that they're interested in, give them the lowdown, the information. And a lot of times they'll also send somebody that they know here that they trust to also look it over.
And I just want to, sorry, go ahead.
And when they have an excellent attorney, it really completes the process, because then they know they're buying something real, legitimate, legal, and that they like, and that they're going to appreciate when they come and actually physically see it.
Absolutely. And I just wanted to add, for everyone in the audience who might not be familiar with virtual showings, the technology, especially in light of COVID, has advanced so rapidly. You really do feel like you're there and walking through. And then when you see it in person after the fact, you feel like you were there all along. So you really should not feel any apprehensions about virtual walkthrough. So I just wanted to bounce right off of what you were saying about a lawyer, and I wanted to go to Jane. And Jane, I was hoping that you could tell us a little bit more about the role of a lawyer in foreign purchases and how to buy remotely.
Okay, so that's a good question. If you listen to Yaniv's answers, most of them began with, it depends, which is a very classic comment in Israel, because there's so many variables, which is why real estate law in Israel is a real specialization. Because it takes a lot of years to really gain the understanding of the differences in the registrations, et cetera. In Israel, there isn't one tidy registration body where all the properties are registered. There's a few different places that it can be registered depending on what area it's located in, sometimes a combination thereof. And you really have to know how to first check title, which is one important difference. The most important role that your attorney serves is that we are your title insurance, because there's no title insurance in Israel. There's also no escrow companies, which we also serve that function. So how it, where we come into the process is that we're really the person that is doing the thinking for you. We have to ask the questions that wouldn't even occur to you to ask, and especially to explain the process. And how it works remotely is that we work with power of attorney. Again, depending on where it's registered and what you plan on doing, if you plan on taking a mortgage or not a mortgage, how we're going to move your money, all these different variables, we have to prepare the relevant documents and send it to you and arrange for you to sign it remotely. A lot of countries you can use notary and apostille. Canada does not have that mechanism, so you have to go and sign documents at the Israeli consulate, which is a bit of a trick right now based on what's going on. So some people do go down across the border into New York and use a notary and apostille there. That's one way that we get around it. And then we have the documents FedEx to us, and then we can act in your stead for all the facets of the purchase. Again, we're very careful. It's a very big responsibility for us as attorneys to use that power of attorney, so we only use it once we have authorization that you've understood all of the aspects of the purchase and you've authorized it. Getting to the point where you understand all the aspects is really our role. One of the most important differences in the process in Israel as opposed to other countries is that there are no contingencies for contracts in Israel. There's no contingency for inspection. There's no contingency for financing, all of those things. Everything, all of your due diligence has to be done before you sign the contract. And our role, especially when you're doing it remotely, is to, first of all, advise you on what kind of due diligence needs to be done, perform whatever due diligence we as attorneys can do, and then organize the other professionals that will help you get all the information you need in order to make an informed decision. So, you know, to expand on that, due diligence includes an inspection. So if you want to have the property inspected, we would organize an engineer for you, making sure that you have financing. We would refer you to a mortgage broker like Moshe, or, you know, we have a small team of people that we generally work together, and you have to make sure that not only have you been approved by the bank based on your financials, but based on this specific property, because there are certain properties, for instance, sometimes in the, you know, over the green line or in the territories that they don't necessarily love. And we have to make sure that they like you for this property. And also sometimes if there's planning issues, for instance, you're not sure if the house matches the permits, which can affect your finances, or if you only want the property, if you can build an extra room, say, we need to make sure that we can get those answers before you sign, because once you sign, you're in. We also organize, you know, your payments. Again, there's a few different ways to do that. I think Yair's going to talk about that a bit later. And our role is to really be your information gatherer so that you're making an informed decision. You don't have any ugly surprises at the end of the day.
And I just wanted to go back to the very, very first thing that you said, and I cannot reiterate it enough to everybody watching in North America. If you do decide that you would like to go through the consulate to deal with all of your paperwork, please make that appointment very far in advance and bring every form of ID and possible paperwork that you could need in multiple copies with you, and be prepared to spend quite a bit of time. It's something important. It's something that needs to get done, but there will be absolutely no tolerance for mistakes and, oh, you can just email us with whatever missing document. Everything must come in a hard copy with multiple documents that you need to be ready to give up. So please, please, please be aware of that. It's not listed online anywhere, and it's something that will come up in the process.
And Israel, as we were speaking beforehand, Israel is very, very paper, original document centric. They will not function off of a scanned copy for the most part, all these kinds of things. As high tech as we are, they're very antiquated with regards to the focus on original documents, and those need to be done very carefully. One wrong number in your passport number will tank the whole process, and we'll have to start again.
Absolutely. And something for as simple as a laminated document will not get approved. Everything must be in its original form as is.
Two things I want to actually add to just what you said. First of all, like Jane said, like I know it's funny anecdote, but for example, I know in North America you like to sign things with black pen. In Israel, like they want a blue pen. Make sure you can see that it's original. So that's very important to remember. Something else I want to just address: when you go to the consulate, It's something that has been recently they're paying much more attention to it, that you understand pretty much almost every word in the document. If you, for example, go to the consulate with a Hebrew document, when you cannot read it, they will not authorize you, or they will not verify your signature. So, you need to really speak to your attorney, make sure that he guides you and holds you by the hand to make sure when you go to the consulate, not just that, it's going to take you a long time, but it's not going to waste your time because you have to go and come back another time because you just can't, they will not do the authentication of your signature.
Very important. Thank you for sharing. Anyone else before I move on to the next thing?
Yes, I would like to add something about what Jane said. I would recommend clients, after going to the consulate, that they take a photo and send it to their mortgage broker or their lawyer to make sure that everything over there is correct, because once they send those documents to Israel, I've seen multiple times where somebody missed a signature or something wasn't correct, and then they had to go through that entire process all over again, and the bank doesn't really care that right now you're at a point where if you don't transfer the money, you're going to be breaking your contract. So it's really important to do your due diligence while you're at the consulate as well.
Agreed completely, because remember, it can be many, many weeks until you'll be able to secure another appointment. And if you're working on a tight deadline, it might be challenging. And speaking of deadlines, that's what I wanted to speak with you about next, Jane, which is, could you kind of walk us through what the timeline of all of this is, kind of the loose dates, how long it takes to get things sent in, to get back, etc.
Right, so again, back on our overall heading of it depends.
Of today, it depends.
Yes, today it depends. In general, depending on how long it's taken you to find the property, how it works is, once you found a property with an agent, Yaniv, for instance, would broker the basic business terms of a deal, meaning the basic price and when you would take possession. As he said before, sometimes we have an empty apartment and the buyer has cash and we can, swap as soon as we can. Sometimes people come up with arrangements where, they're able to stay in the apartment for 2 years. Sometimes when you're buying new construction, which Yair will talk about a little bit later, it can be 3, 4, 5 years even. So, those kinds of things from the beginning to the end can be a very long time. Regarding the contract process, in general, within a few days after you've agreed on terms, the idea is that the seller's attorney will send out to the buyer's attorney a draft contract. And once that draft contract is sent, that signals like the opening of the games, right? That's when we as buyers begin to do our due diligence. And again, you do have to invest a certain amount of money in that due diligence to make sure that it's a contract that you want to pursue. Because again, the due diligence is before you sign. So you have to at some point kind of start putting in to do the inspection, to get the appraisal, all those kinds of things. So we kind of work in parallel tracks. We get the contract, and as attorneys, we begin reviewing the contract, the legal terms, making sure that it's balanced, it reflects what everyone's agreed. We check title. We make sure that there's nothing else. Depends if they have a mortgage, we have to see how much the mortgage is and how that will get paid off within the framework of the payments. And in the meantime, then we begin our external due diligence with the various professionals which we might bring into our team. An inspector or an appraiser, discussing with the mortgage professionals to make sure that we have financing, start working on moving your money. Because again, the thing is, we finished the contract, we're ready, and then our clients start moving money. It makes a lot of friction because the seller at that point thinks we're done. And then it can take a week or two. So you have to have someone that can kind of timeline this all out for you. In general, as a general rule, it takes 3, 4, 5, 6 weeks, depending on whether or not we have any documents from our buyer. Sometimes someone's been in Israel in the last year or two, and we already kind of have enough documents to start. If we're starting from scratch, it generally is, I would say, a month to 6 weeks.
Is there a waiting period for some sort of documents that they need to receive domestically?
No. Again, generally, most of our title abstracts and things like that are computerized. We can pull them out of a database. And then even, for instance, if you're buying an apartment, there's a condominium registry if you're buying things in the major cities, and you can pull that out. Sometimes it does take a bit of time if you're buying things in the outlying areas, especially, again, in the territories. That's a different registration body. And if we have to send someone, especially with the COVID limitations, you know, a lot of the government offices just went back right now to the COVID, you know,
Right.
opening hours, and then we have to wait for them to decide to go to work and get us the documents. So sometimes we have things like that. But in general, the documents in Israel aren't really the holdup.
I understand. All right, Yair, to you, I have such an interesting question, which is, I'm so curious about the fact that there is a difference between secondhand and new construction properties. This is something that doesn't really exist very much in North America, so I would love to hear more about the situation and what everybody needs to know when entering the market.
Yeah, so I'll start, from the basic, to one of the things you mentioned before, the timeline. Usually when you buy a secondhand home, it would something that would take shorter time. I would say like the average time of closing a deal of secondhand would be pretty much 2 to 6 months. While you buy from a builder, you buy off the plans, it's something that can take years, 2, 3, 6 years. It's not something that is unheard of. Because it depends, how early on you buy. If you buy the pre-sale before they even have building permits, then the process until they get the building permits, start the whole work and go through the flow could take many, many years. But there's a huge difference in how you do it, what you check, what you negotiate. The contract is very different. When you buy secondhand, so usually shorter, your lawyer does a lot of due diligence. But the due diligence is what was built. Has it been built according to permit? Are there any parts that are not legal? And that's where Jane said, you create yourself the team that helps you to check everything along the way. When you buy from a builder, then you said beforehand, what are the plans? You see, you can't see the apartment itself, but you can see what it's going to look like, how it's supposed to look at the end. But it's not necessarily, because there could be changes along the way, which the law does allow. Yeah, as we say, it depends. There could be changes that come along the way, and some of them could be issues that will allow you to cancel the agreement, or some things you'll have to live with them. But something very major and important that you do have when you buy from a builder is the guarantees. According to the law in Israel, when you buy from a builder, you have to get a guarantee for your money. So there is, even if you buy it over 6 years' time, your investment is not at risk. It is guaranteed. And there's 2 types of guarantees you can get. Either you get a lien on the property, and the payment is set according to the law, according to the advancement in the building. So, they finish the shell of the building, you make a payment. They finish tiling your floor, you make a payment. They finish the exterior of the building, you make a payment. So, that guarantees you because you have a lien on the property, and you're only paying for something that they have already done. A second and more common way is getting a bank guarantee. Every builder nowadays usually gets a construction loan. And that means that for every dollar you put in, the builder or the bank actually issues you a guarantee for your money. So if something, God forbid, happens, either the bank will find the builder that would step in and finish the construction, or you'll get your money back plus interest. Even though it's a much longer process, for many people it's good because not necessarily they have the $2 million right away to pay the full price for the apartment. So that way the payments are more staggered, and you have the way you make payments as you can, and your money is still guaranteed even though it's a very, very long process. And at the end of the day, at the end of the construction period, as Jane said, we would usually guide you and tell you should get an engineer to come and inspect to make sure that everything is according to code, that they've not done, and there are mistakes. When you buy in a building, where there are 10 floors or 20, 30, 40 floors, they build en masse. There could definitely be mistakes, and some of them are things that are major. Sometimes, we have seen, sadly, that suddenly the pipes are in the wrong direction and water is flowing inside the apartment instead of the other way. And that is a major issue that you need to really redo the apartment. So, but the law, seeing that and knows that the builder is a stronger party, set warranties. For the first year after you receive keys to your apartment, everything in the apartment is under warranty. And then along the way, there are different warranties. Some of the warranties are for 3 years, 5 years, 7 years, to make sure that the builder doesn't just disappear, the minute you got the money, and you have no way of fixing or guaranteeing your investment.
That's an important difference between secondhand construction and firsthand, because again, secondhand construction, there is no contingency. So you're buying the house as is, unless there was a hidden defect. And so there's no guarantee. Whereas firsthand construction from plans, you do at least have certain warranties within the law. So that can be a benefit to buying like that.
But there's no contingency. The same way, there's no contingencies. If you are planning on financing some of the purchase, even from a builder, from a mortgage, if you're not eligible at the end of the day to get the mortgage, you will have to find a way of financing it. You can't say, okay, I don't have the way to bring the money, and then you can back out.
Are you saying that people would be even willing to engage with you to any degree without a pre-approval?
Yes, I mean, it's very different if you buy secondhand, because when you get, and I'm sure Moshe and Odiel are going to touch on it.
Of course.
A pre-approval is something that is for 3 months tops. So if you're building, and again, they're going to touch on it as well. When the bank gives you a loan, he will not put the money until you put all your share, all the cash that you're coming with. Only once you put your cash in, then the bank will put it. Because they don't want to put that the bank put his money, and then you don't have any money left.
Of course.
So, and that could be, many years down the line, especially when you're coming from abroad, and they're going to touch on it as well. You will not be able to get more than 50% loan at the moment. So
got it.
You need to put your money, and in the 50% could be 3-4 years down the line. Your pre-approval is not going to be valid then. Many things could happen during that time.
Of course, understood. So my final question on this before we move to talking the real money is taxes. What is the situation with taxation, Yair?
So tax is actually very, very complicated in Israel. And this is one of Jane and I always tell our clients, you need to plan ahead of time. If we talk about the general tax at the moment, the general tax for somebody buying overseas, coming from overseas, you would have to pay 8% or maybe even 10%, depends on the purchase price. Tax is staggered along the different stumbling stones, of prices. Now, as I said, the general tax would be 8% and 10%. Now, if you become an Israeli resident within 2 years of the purchase, then you'll be eligible for a lower or a single residency leniency in the tax. That it can start from 0%, 3.5%, 5%, and then it'll go again up to 8 and 10%. Something else is Aliyah. In 2014, the law changed from a question of citizenship to a question of residency. And before, if you were a citizen of Israel, you could get a lower tax rate, even if you're not living in Israel. In 2014, it changed to a question of residency. So, the first, what I said before about the lower tax rates is for being a resident without being a citizен. The Aliyah rights is if you become a citizen of Israel, then you're eligible for another leniency, which would give you 0.5% and 5%. Now, when is it more beneficial to use the residency or the Aliyah rights? That's something you need to really speak to your lawyer to make sure you plan ahead in order to save on your tax. In general, the point of that both of them are around the same tax is about 5 to 5.5 million shekels. Anything below it, it's better to use the residency rights. Anything above it, it's Aliyah rights. But you need to do tax planning, because if you already have an apartment in Israel that you bought or inherited, or if you want to come to Israel and buy, a couple of apartments, the order in which you buy it, the way you do it, can save you a lot of money. Now, one last point, because Jane mentioned it before. If you buy over the green line, for example, if you are not Israeli resident or you're not an Israeli citizen, you need to neither an Israeli resident nor a citizen. Then, if you buy over the green line, you do not have any purchase tax or capital gains to pay. But you have to do it minimal 2 years before the purchase. So you need to plan ahead. You know, I don't think anybody thinks, you know, wakes up one morning and puts, okay, now $3 million, I want to buy an apartment tomorrow. But it's important to plan ahead quite a bit of time to make sure we can save you as much money as we can on the taxes, because the timeline, the order can make a huge implication on how much you'll have to pay.
No, I think it's key that you've said this, because I think so many people in North America are accustomed to, you know, browsing online, looking casually. They see the one, and then they want everything within 30 days or 60 days to be completely done with the keys moved in, turnkey, and have no idea that in other places that this can be a long-term project. So if this is something you're considering, really start now or start yesterday.
The process is different. You know, in real estate in general, I think all over the world, it's not a timeline of fast food. You know, it's not a chain. You come in, you buy. You know, it's something, the whole process always takes time. So yes, nowadays, if I'm comparing to what my father said, you know, that in the past to sign a contract, it would take you, you know, 6 months. As Jane said, you know, nowadays usually 4 to 6 weeks. So things are moving faster, but they're not as fast as you would consider. Just within a week, you can close it. You could,
Right.
It's very, very rare. And
Right.
Again, especially if you're coming from abroad, you want to make sure you're doing an educated decision, to know where you're buying, to check the opportunities, the different options that you have, seeing where it costs to mortgage, to regarding to place, to financing, how to transfer the money. As we say when we lecture, you know, you have to create yourself the team that would guide you, especially from afar, guide you throughout the process. Make sure you know, everybody hears the horror stories, but you want to make sure you are not part of that. And that's why you have to create yourself the team that will help you through the process.
I think one thing also, just in general, to add, one pitfall that we see, someone was asking, you were asking earlier about, you know, Anglo areas and stuff like that. We see a lot of people that go and they move to Israel and they rent first in an Anglo area, but they don't check the buying prices, the actual housing prices.
Mm-hmm.
And then they find themselves suddenly in a situation where they can't actually afford to buy in that area.
Right.
And they're forced to either continue renting or kind of making Aliyah again to an area that they can afford. So when people are looking for an initial area, it's important to check not only rental prices, but also potential housing prices, so that they can see that they can, if they like that place, that they could grow into it.
It's also, I like to always say, and maybe you can elaborate on it more, there are two different prices when you buy a place. If you buy a place as an investment, that's one price. But if you buy a place to live in, it could be a totally different price, because what you're willing to live and look at as an investment would be totally different. And you know, that's why, like Jane said, you have to really check, you know, the prices around there. What is your preferences? Not just what's, you know, the ongoing price. It's what's good for you. What are your needs?
Absolutely. Before I turn it over to Moshe, I just want to encourage everybody who might have any questions, since we are pretty close on time, to please put them in the comments in the chat so we can get to all of them. Moshe,
very much. I'm gonna have to leave, but thank you so much.
absolutely. Thank you so much for joining us, Yaniv. Thank you so much. Moshe, you were telling us, or we were speaking earlier, and you were really talking about, you know, buyer beware and the differences in cultures and what people need to understand about banks versus brokers. And I was hoping you could just, before we get into questions, just give us a little recap of what you were saying to me and what's important for North Americans entering the market to understand about the finances.
Sure, and I really think that it's come up a couple of times, the theme of expectations. Mm-hmm. And I always tell my clients, you know, everything matters, but what matters most is context. So both, you know, a lot of good points were brought up. I want to focus, you know, on sort of two different areas, but I really caveat emptor the definition is accurate here in terms of it's the buyer's responsibility for checking the quality and appropriateness of a product. But the term has such negative connotations, because the fact of the matter is, statistically, the horror stories are not the statistical norm. You know, that's mm-hmm. when you don't follow everything we're talking about. So I would like to frame it in a different way, and let's sort of compare the differences in the landscape of the mortgage market in Canada and that consumer safety net that exists with the Israeli mortgage market. So again, you are all much more familiar with the Canadian mortgage market than I am, but allow me to use it as a way to illustrate these differences, because I would, in my experience, over the past 20 some odd 30 years, this is one of the things that gets, because as much as any of us tell our clients about expectations, they're always shocked. So this is sort of a fundamental thing. So the Canadian mortgage market has been around for many, many decades. Post World War II, you guys constantly developed. There is a myriad, many sources between brokers, banks, direct lenders. There's more lending sources than you could identify, and those lending sources have many different ways and sources of access to capital and ways to structure it. So more importantly, over the past 30, 40 years in different phases, you have a regulatory framework that has been developed, laws and regulations, with one primary objective: protect the consumer. For example, your APR regulation, very similar to the Truth in Lending in the States and their APR regulation. And you've had regulatory acts from your Financial Consumer Agency of Canada, Mortgage Brokers and Lenders Administration Act, and the creation of your FCAC. I think it's the Consumer Agency of Canada. And what they do is they create an environment and an oversight where everybody knows that it is the mortgage industry's responsibility, whether it be broker or banker, to make sure the borrower understands, to the extent that it's that broker or banker's responsibility when they discuss a mortgage, not when they're signing, but when they're discussing a mortgage, get a signature, a disclosure signature, very similar to your North American neighbor in the US. But the idea is the responsibility is on the industry to make sure that the borrower understands what you're talking about, even before anybody goes to sign loan documents. For the sake of the analogy, let's just refer to the Canadian mortgage market as like a large multinational corporate Fortune 500 company. Now let's talk about Israel, okay? Everybody knows Israel is the startup nation, right? And in a certain way, the mortgage market is no different. The mortgage market is young. It's only been around since 1990. 1990 is when the mortgage banks started needing to loan their own money from the Modaid Commission. Everything was started in a decade earlier. But before that, they were just administering government funds. So we're talking from 1990 until now, that's just 30 years. And for the most part, the regulations that we deal with are 2010 post. So you have to understand.
I have a quick question though. When that system transitioned from being from the government to the lenders, are those federally backed mortgages?
So again, we're a couple of generations behind that, because whether it's your CHAC, or the Canadian Housing Bank, or Fannie Mae or Freddie, these are insured loans. Right. Maybe your CHAC is more similar to Ginnie Mae in the States.
Right.
Even Fannie and Freddie are inferred, but nobody's putting out money. They're only putting out their balance sheet and a guarantee. Israel does not do that, unfortunately, at all. The only time they do anything is when they put out cash, right? So in 1989, it was all government cash. In 1990, I think the ratio was something like more than 50% government cash and the rest the industry. Today, because of various factors, it's probably about 5% government cash and the rest from the private mortgage market. But keep in mind that private mortgage market, we're talking about what's in North America is referred to as portfolioed loans, meaning the only time they're selling them is once in a blue moon as a package to either an insurance company or a pension fund, and you can count them all. You could have two hands and have a lot of fingers left over, right? Some of the smaller banks will have facilities. For a while, HSBC was funding a number of the banks here. I'll leave nameless, but for the most part, there is no secondary mortgage market, and again, it really affects it affects the way things are done, because you only have a few players, both on the primary in terms of lending, right?
Right.
Your money supply is very limited, and it's something I was actually involved in a good part of the 90s with a group in the government that wanted to create a secondary mortgage market here because they knew it would be needed. But it affects what we have today in the mortgage market, and more importantly is that there is no consumer lending regulatory framework similar to what you are used to in Canada, right? Again, because the Israeli mortgage market is young. So they're starting with some things, but for the typical borrower in North America, it would be laughable.
So that being said, with the understanding that there are so many differences, I kind of wanted to, I hate to say dumb down my questions on this topic a little bit, but I feel the need to kind of get those basic questions out there in the event that there are these very fundamental differences. So my first question to you is, do brokers, lawyers, sellers, etc., typically ask that a client is pre-approved for a certain amount before they'll even start working with them?
Yeah, but again, let's talk about definitions, because again, it's been a long time since I did anything in Canada, but from what I remember, it's very similar to the US.
Almost identical.
A pre-approval in America, is almost worth the paper it's printed on, because it is not a true underwriting. It's not a commitment in any way. There's a difference in North America between a pre-approval and a conditional commitment. Only thing that exists in Israel is a conditional commitment. It is an underwriting. So as Yair mentioned, there are certain aspects. There's no rate locks, effectively, right?
Okay.
Rate locks, you need a watch. But if you have a rate lock that's 4 weeks, which you can get, that's a big deal here. That's like getting a 120-day rate lock in North America.
Right.
But this is one example of many of how different things are. So when you do get that approval here, though, on a positive sense, it's something in the system. And very often I will encourage my clients that will go through this. It's called the Insure Ekroni. So again, that's not just a pre-approval, it's a conditional approval, and it could be done without a property. You just know the budget. And it is conditional. And as Yair said, if you're talking out a few years, then who knows, because of income changes, regulatory changes, et cetera. But if you're within a year plus horizon, I think Jane and I have a couple of stories where we worked with people over a period of time and it's very worthwhile, because when they go through the process, they know exactly what they're expecting and what they're getting. And they, even though that after the rate locks have expired after a week or two, even after the 90 days, they're still in the system. And we can update that. And they know, now they're going in with confidence that they can. For example, as everybody said, there's no contingency. So it is very beneficial to get that Insure Ekroni.
My next question is, from your personal perspective, what percentage of the mortgages that you're working with have been from non-residents? And in addition, how many people in that process along the way said, I might as well just make Aliyah at this point for the benefits? So
it's happening more often. And again, as you mentioned, there was a change in the law in 2014. So we have two types. We have Israeli citizens that are not residents. So where they were talking about before about the purchase tax, right? What's important for us is the Bank of Israel. By the way, unlike the system you guys have, we have one regulator that needs to do everything. They do everything from the central bank. They in charge of all banking regulations, and they regulate mortgages. So one of the things they did post 2008 is make a hard stop on loan to values. So there's a big difference. It doesn't matter who they are, how strong they are. A non-citizen is capped at 50% loan to value. That's a regulatory hard line. If
That's
they
very
have
important to
Israeli
know.
citizenship and they qualify, right, they can get up to 75% loan to value, right? So it happens to be you guys are not like your neighbor,
Right.
where you guys, where a 95% LTV is a normal thing. Your LTVs are in the 70% plus or minus range.
Got
but
it.
50% is all you can get without that citizenship.
Understood. And what borrower disclosure exists in Israel? How does that work?
So as I mentioned, we could go to the next question. I mean, for a North American, we can go to the next question. I mean, you have to assume that there isn't, and you have to trust, between your lawyer, mortgage broker, etc. You have to trust somebody's and explain to you what it is, because we don't have enough time. But
yeah, of course. So then I guess my big final question is, what are the mortgage terms available currently, and how are they different from the Canadian market?
So let's talk about the things that are available, because it's an interesting combination. So you have our shorter term rates can be shorter, and our longer term rates can be longer. I don't believe you can get an adjustable more frequently than once every 6 months in Canada, correct?
I'm not sure on the adjustable.
In any case,
we have short.
We have the cheapest money is Bank of Israel Prime, right? That could change at any minute. And when Stanley Fisher was, leading the Bank of Israel, and he wanted to ward off inflation, it changed very frequently over 2005. And like in the U.S., you can get a fixed rate loan for 30 years.
Okay.
So I believe the longest fixed rate you can get in Canada is 10. In terms of prepayment penalties, there's more and less. So you have a prepayment penalty that somebody will pay if rates have gone up. And so they're refinancing into a higher interest rate market, there's still something they'll pay. In Israel, they have a 60 shekel, they're required to give 10 days written notice, they pay a 60 shekel fee, and they're not going to pay any penalty. The opposite though, you guys have a cap on what they're going to pay if rates, they have a 5%, they have a 4% fixed rate, they're refinancing, and now the market's at 3%. In Israel, it could be prohibitively expensive.
I see. I understand. That's very important to take a note of. And Odiel, I wanted to bring you into the conversation and talk about the logistics. I know that Moshe was kind of outlining the system at large, but something that really catches North Americans off guard is the fact that in Israel, there's no credit in the American or North American sense of the, go online, creditkarma.com, and check your credit score in the same way. And how does that work when it comes to, what other credentials you need to measure credit in this process?
So recently, about a year ago, the Bank of Israel actually did start a credit score system that's very similar to what exists in the United States and Canada. The main difference is that the financial institutions are the only ones that actually have access to it. They don't want public sector having access to a person's credit score. This way, if a person's trying to rent out an apartment and he has a bad credit score, it won't impact whether the landlord would want to take him as a tenant. So there is a similar system over here. There are 3 credit companies that work with the Bank of Israel. The banks here in Israel don't have access to foreigners' credit score system, credit score report, and are asked to send over their report with the rest of their documents.
I understand. And
just to clarify, I mean, and again, for full disclosure, one of those credit reporting companies I started, but there's a difference between a credit report and a credit score. So the credit reporting industry here started in 2004, but again, like a lot of things, the regulation that was passed, they needed to restart the whole thing again. So it in 2016 started again, but there's a credit score that's available on everybody that you can buy, you can get online on yourself. You get it just like in North America, you get it free once a year. But in terms of a score, there's only internal. You don't have a FICO here. So and everybody will ask you, as Odiel said, for your credit score and credit report, you know, your Experian or whatever. But it is important to make the differentiation. There's a credit report here. There's no credit score like a FICO.
And following up on that, what additional documents should you have on standby on an ongoing basis? And if you have Israeli revenue, does that impact the kind of paperwork you need to provide?
Israeli revenue? All right, so I would like to start off what the foreigners would need when they're actually applying for a mortgage. They would need the last individual tax return. Certain banks here in Israel would ask for the previous 2 years. Like I said a moment ago, they would also need their credit report. They would need their last 3 pay slips for each borrower. And they would need the current bank statements from abroad for the last 3 months. If they have an income here in Israel or a bank account here in Israel, it would be the same requirements as well that they would add to those documents. And foreigners are also required to give 2 different identity documents, usually a passport and a license. For somebody that is self-employed, he would also need to bring a CPA statement that of an individual income for the current year. This way, the bank can understand what the person is earning for this current year. And a company owner would also need the last audited financial statements of the company and the profit and loss statement for the year.
Since we always like to give a heads up, as we did before with Jane, with anyone who might need to deal with the consulate, are there any documents that you mentioned that will need to go to the consulate to get notarized that everyone should be aware of and planning ahead of time?
Yes, for the most part, the documents that need to get notarized are the documents if the person is only taking the mortgage from abroad. Basically, he would be signing a power of attorney and allowing a family member in Israel or a close friend, somebody that they would trust, sign on their behalf for the mortgage, because somebody has to sign on that mortgage, and the only way to do it is signing over that power of attorney. And it's really important to understand that it needs to be somebody that you really trust, because they have the full power of the house. They can sell the house. They can do whatever they want.
I want to add on that. Usually, like when we as lawyers send you a bunch of documents for someone who's looking to buy in Israel, would be there's a few documents that we'll try to get it all from the get-go, so you don't have to go back to the consulate a second time. So those things would be like the power of attorney for us as a lawyer. Now that power of attorney for buying the apartment would usually not be good enough for the bank. So you'd have to get also another bank. You know, there's 2 or 3 banks in Israel that mostly deal with foreigners. So you'll get, you know, that power of attorney. You'll get a document that we need in order to report the transaction to the tax office. Sometimes it'd be another power of attorney for to open a bank account in your name in Israel. And what's a KYC that nowadays we're obligated according to the Ministry of Justice. It's a know your client. Make sure you know that you're not a money laundering terrorist. It's a form that you have to fill up and sign also there. So it's a bunch of 4 or 5 documents you have to sign, which should allow you to pretty much the same thing as buying the apartment, open a bank account, and even sign the mortgage the mortgage documents in case you're taking a mortgage.
And this is really the detour that needs to be taken to avoid having a mispar zehut, right?
One is not relating. You know, you can take a mortgage whether you're a foreigner or Israeli. At the moment, even if you're an Israeli, but you're not a resident, the Bank of Israel still limits you to 50% loan.
Got it.
So whether you're a citizen or not doesn't affect it.
Absolutely.
But if you are starting the process as a foreigner, as a Canadian, for example, a Canadian passport with an Israeli ID, if you move to Israel before you start making the payments, you will be eligible to a higher percentage as Israeli resident. But that's only if you really start the process or start getting the funds before only after
just to correct, that you can't, if you don't have Israeli citizenship, the Bank of Israel won't allow them to do the higher LTV before you actually have a Teudat to put in the system. So the taxes is based on residency, but without a Teudat, they can't give you a, the higher LTV.
I've seen
Got it. Odiel, I wanted to ask you, is there any sort of back-end consideration when people apply, whether the property will be used as an investment property or whether it'll be owner occupied? Does that impact the process at all?
No, for the most part, it doesn't really make a difference. I mean, there's obviously there's tax. There are certain taxes when a person is renting out an apartment, depending if he's a local Israeli resident or if he's a foreigner. But for the most part, foreigners can get, like we said, up to 50% finance, and the Israeli counterpart, the Israeli resident, is able to get for his first home up to 75% finance. And on an alternative apartment, an Israeli resident is able to get 70%, and then an Israeli investor is also able, meaning an Israeli person that owns an apartment and wants to buy a second apartment, he's also only able to get 50% finance as well.
If a foreign buyer is buying at that 50%, is there an additional percentage of fees that are tacked onto the mortgage as a foreign buyer's, mortgage fee?
Yes, there are certain fees at the mortgage. So for the most part, there's an appraisal fee that could cost a few $100s. If a person's buying a house, it could possibly also be a couple $1,000s as well. It really depends on the value of the house.
Is there anything on an ongoing basis or only, at the front end of things during the purchase and getting the mortgage done?
There is a loan origination fee, which is 1/4%.
Okay.
And yeah.
Okay.
If a person,
and then,
for companies, for LLCs or corporations that are getting mortgage, would be 0.1.
That was my last question.
1%. Yeah.
So that was my very last question, which was, what would the difference be for an LLC? I just wanted to say thank you, everyone.
Yeah.
I'm so sorry that we went. Yeah, absolutely.
All right. So the main difference is between the two, between the private individuals and foreign businesses. First, private individuals able to get up to 50%, while foreign business is able to get between 60 to 70%. Regarding rates, the interest rates for a private individual, if it's under 45%, it would be probably a lot cheaper than getting a mortgage for a corporation. The length also of the loan, the mortgage, it would be, for a private individual, it's 30 years, while for a corporation, be 20 years. Life insurance, that's another thing that people need to take into account. Here in Israel, people are required to get life insurance as well. And a private individual, for the most part, won't be able to get an exemption. And a foreign business obviously doesn't need that life insurance. And also, I see somebody asked me a question about what is maximum age banks give mortgages here in Israel. So for the most part, banks here in Israel approve mortgages up until the age of 75, meaning the person needs to finish the mortgage by the time he reaches 75 years old. There are certain banks that do give mortgages up until the age of 80, and there are certain rare circumstances that certain banks would give up until the age of 85, but they're very rare and they're not something that everybody should rely on. It really depends on the income that that family has. Now, regarding the question itself, somebody that was 80 years old, would they be able to get a mortgage? Most likely not. They'd probably be better off trying to get a loan from a bank, which is a lot simpler process, and they probably won't be able to get as much of a loan like a mortgage.
Got it. Thank you everyone for joining us. I'm so sorry that we went over time, and thank you everyone in the audience at home. I hope you found this highly informative, and we hope to see you next time